Hey traders, Raghee here, and in this recap video I'm going to cover a sector that I've been asked a lot about, and this kind of takes me back to a trip that I made up to New York to do a trade interview with Real Vision, who I'm a big fan of what they do. It's a great macro look at the markets, and the trade that I presented them was a long energy trade, specifically based upon seasonals that apply to crude, unleaded, and heating oil between the months of February and June. And what was interesting about the setup, and I'm not going to ever take a trade based upon a seasonal alone. It's going to be one of many factors. And what we had were pretty decent uptrends on the weekly charts of these markets, even preceding this recent rally. We had intact uptrends, and unleaded gas and heating oil were both sitting at oversold support levels, which are levels that you can see back in here. So we're sitting at oversold support levels. So the seasonal was kicking in, the timing was right, meaning the mid-February, March time zone. We were sitting at levels that should be support, and we got long, not because of the trend, but because the markets were oversold and they had the seasonals as wind at their back. So that takes us back to sort of the inception of the long gasoline and long heating oil trade. Now, crude oil is a whole lot different. Crude oil is a political and geopolitical hot potato. There's a lot of back and forth on crude, but the bottom line is there's a certain inevitability of reaching levels like 70 and 80 on crude. It's kind of what the market's sort of prepared for. And if you look at the overall trend, I mean, my bias is to the upside overall. All this green, and again, even once we start to chop around, I have what's known as a bullish bias. I'll call this a bullish bias because of where we came from. I'll favor the oversold buys. Now, there was a trade that we took most recently, and this was a kind of aggressive level trade that had to do with Syria. And here I took advantage of a level that I felt was overbought. It was political in Syria. And we put what's known as a strip straddle position on here, or went straight up with put options. Now the strip straddle position allowed me to take advantage of my bias to the downside, which is, as you can see here, subsequently what happened. This was the timing, and I also was looking to take advantage of, again, overbought Syria. We rallied into Syria. We were looking for a move lower after the military mission was completed. So a little bit of a let off, which is what we got. But then we were looking for the market to continue higher. There were two levels I was looking at, 66 and 65. 66 was my first level to take some of the strip straddle position off the table, and 65 was my big number to engage the 34 EMA on the high and get back in on the uptrend. Now, the punchline was we only made it to 65.55, so fell short, but the bias was still there. And that makes me happy because the market is doing generally what I think it should be doing. So the next pullback we get, I may be a little bit more aggressive. I could put a straddle position on, or we can go straight up with calls, or I could wait for the market to revisit the 34 EMA on the high, or even the 55-cent level. You could even look for a retest of 55. So there's a lot of choices, but the bias is long. In fact, the bias always was to the long side, but we wanted to take advantage of a very specific event, which was the Syria event going into the weekend, and that's where the strip straddle made a lot of sense as opposed to the strap. All right, so this is essentially where we are. We still have the seasonals at our back. We're still long unleaded and heating oil. We still have about another month or two before that seasonal plays out. We want to make sure price action is in fact confirming the seasonal tendency, and the next time around we're looking for a long in crude. In the meanwhile, what I would recommend is Focus on the shorter term time frames for crude. Focus on the 60-minute time frame or less, and think as a day trader until we get the zone that we're looking for reached. So think nimble, think short-term time frame until we get the longer term setup that we want. I'll see you in the next update.